There are thousands of different cryptocurrencies, which can make it overwhelming when you are first getting started in the world of crypto. To help you get your bearings, these are the top 5 cryptocurrencies based on their market capitalization, or the total value of all of the coins currently in circulation. As usual, to save you on time, timestamps are in the description. Otherwise, kindly subscribe. We are on the road to 1 million subscribers. New uploads every Wednesday. 1. Bitcoin. With a market cap of over $1 trillion, Bitcoin was created in 2009 by someone under the pseudonym Satoshi Nakamoto. Bitcoin opened the door to blockchain-based, decentralized currencies not issued by any nation. Bitcoin's first mover status, and its hard limit on a maximum circulation of 21 million coins, and its potential to become a store of value on the balance sheets of corporate America. A future which Tesla Inc. hinted at, with a $1.5 billion Bitcoin purchase, announced in February 2021, making it a must-own cryptocurrency. As with most cryptocurrencies, Bitcoin runs on a blockchain, or a ledger logging transaction, distributed across a network of thousands of computers. Because additions to the distributed ledgers must be verified by solving a cryptographic puzzle, a process called proof of work, Bitcoin is kept secure and safe from fraudsters. Bitcoin's price has skyrocketed, as it has become a household name. 5 years ago, you could buy a Bitcoin for about $500. But as of December 2021, a single Bitcoin's price is over $60,000. Also, the value of Bitcoin tends to fluctuate a lot. You may see the price go up or down thousands of dollars during any month. If wild fluctuations like these make you nervous, you may want to avoid Bitcoin. Otherwise, as long as you keep in mind that cryptocurrency could be a smart long-term investment, these fluctuations shouldn't be too concerning. So how can you buy Bitcoin or any other crypto on this list? To buy Bitcoin or any cryptocurrency, you will need a crypto exchange, where buyers and sellers meet to exchange dollars for coins. There are hundreds of exchanges out there, but as a beginner, you'll want to opt for one that balances ease of use with low fees and high security. Make sure to check if your exchange has a Bitcoin wallet built into its platform. If not, you'll need to find one of your own. You may also choose to buy your crypto on a platform like Robinhood, PayPal, or Venmo, though buying crypto this way often means you cannot withdraw your coins and move them to another platform. If you want to hold your crypto to a different wallet, you'll need to sell your holdings and then rebuy them on a different exchange. After choosing an exchange, you have to fund your account before you can begin investing in Bitcoin. Depending on the exchange, you can fund your account through bank transfers from a checking or savings account, PayPal, wire transfers, a cryptocurrency wallet, or even a credit or debit card. Keep in mind, though, that platforms may charge higher transaction fees for certain funding options. For example, Coinbase doesn't charge a fee if you do an electronic transfer from a bank account. However, it charges $10 on wire transfers and 2.5% of the transaction amount if you use PayPal. Things get even pricier if you use PayPal or a debit card to make a direct purchase of cryptocurrency, instead of funding your account and then using transferred money to make your purchase. Coinbase's fee rises to 3.99% of the transaction amount. Credit card transaction fees on other platforms often run at least this high, because fees reduce how much money you can invest, and therefore also how much money you have to grow and compound. It tends to make sense to use electronic transfers from a bank account rather than other methods. In addition, if you use a credit card to buy cryptocurrency, it generally will count as a cash advance and be subject to a higher interest rate than you pay on regular charges. What's more, taking on debt to buy volatile investments is extremely risky. Once your account is funded, you can place your first order to buy Bitcoin. Depending on the platform you're using, you may be able to purchase it by tapping a button, or you may have to enter Bitcoin's ticker symbol. You'll then have to input the amount you want to invest. When the transaction is complete, you will own a portion of a Bitcoin. That's because it requires a large upfront investment to buy a single Bitcoin now. If Bitcoin's current price was $60,000, for example, you would need to invest that much to buy a Bitcoin. If you invested less, say $1,000, you would get a percentage, in this case 0.016% of a Bitcoin. When you decide you are ready to sell your Bitcoin, you can place a sell order through your exchange, much like you did when you originally purchased your crypto. Most exchanges offer multiple order types, so you can decide to sell only when Bitcoin reaches a certain price, or you can place an order that goes through immediately. You can choose to sell your entire holdings of Bitcoin, or only a specified amount. Once the sale goes through, you can transfer the money to your bank account. Your exchange, however, may have a holding period before you can make a transfer back to your bank account. This isn't cause for concern. It simply takes some time to make sure the transaction's clear. When you sell your Bitcoin, you may make a profit. If you do, you would be on the hook for capital gains taxes, as cryptocurrency sales must now be reported on your taxes. 2. Ethereum. With a market cap of over $580 billion, both a cryptocurrency and a blockchain platform, Ethereum is a favorite program for developers because of its potential applications, like so-called smart contracts that automatically execute when conditions are met and non-fungible tokens, NFTs. Also, the only digital asset outside of Bitcoin worthy of being dubbed a blue-chip cryptocurrency. Bitcoin accounts for more than 43% of the entire asset class's market cap, while Ethereum accounts for more than 19%. No other coin has even 4% of the market. Ethereum has also experienced tremendous growth. In just over 5 years, its price went from about $11 to over $4,700, increasing over 42,000%. While Ethereum utilizes blockchain technology, it only has one lane for conducting transactions. This can lead to transactions taking longer to process when the network is overloaded. In 2016, a hack that took advantage of a security flaw led to the loss of more than $50 million worth of Ether. 3. FTX token. The FTX token is among the best cryptocurrencies as the native token for the incredibly successful FTX platform, a crypto derivatives platform which launched in 2019. The firm has made plenty of media headlines recently, attracting a $25 billion valuation in a private funding round in October, up $7 billion from just 3 months earlier. The firm is also gaining mainstream attention from a recent 60 Minutes profile on the company. As a non-Bitcoin crypto, FTT is a so-called altcoin. The token is up nearly 1,000% thus far in 2021 and has a market cap of more than $7 billion. 4. Solana. Although 2021 has had its fair share of crypto tokens taking off, Solana might be the year's most impressive underdog story. Solana has taken the crypto world by storm, starting 2021 with 0.01% of the market and soaring to a top 10 crypto by market cap by September, giving its main competitor, Ethereum, a run for its money. Solana currently ranks 4th in terms of market share, with a market capitalization of $68.63 billion, according to CoinMarketCap. Its appeal lies in the speed and scalability of its network, and the ease with which it can be used to create decentralized apps that run on a blockchain. On the flip side, Solana has seen an astounding 12,000% appreciation this year, according to CNBC, and prices could drop as quickly as they grew. Reliability might also be an issue, considering Solana suffered a nearly day-long outage due to resource exhaustion, according to Bloomberg. 5. Cardano. The Cardano network has a smaller footprint, which is appealing to investors for several reasons. It takes less energy to complete a transaction with Cardano than with a larger network like Bitcoin. This means transactions are faster and cheaper. Cardano also claims to be more adaptable and more secure. It consistently improves its development to stay ahead of hackers. Unlike the stock market, there aren't price-earnings ratios and quarterly financial reports to work with when evaluating a given digital currency's value. Qualitative details matter, which is why having Charles Hoskinson, a co-founder of Ethereum, as a Cardano funder gave the coin instant credibility when it debuted in September 2017. With both a hard cap on the maximum number of coins, the currency on the Cardano blockchain, and its use of the dramatically more energy-efficient proof-of-stake protocol, Cardano combines 2 attractive coin characteristics. However, even with a better network, Cardano may not be able to compete with larger cryptocurrencies. Fewer adopters mean fewer developers. This isn't appealing to most investors who want to see a high adoption rate. The platform has big plans, but there are doubts about whether it can live up to that potential.